Let us firstly go through some basic trading rules before we delve into deeper strategies and what it is that the traders are doing and how they do it. So let me take you through a series of trading rules. I've just picked up 10. Let's start off with the first one. What we're going to do is never let a winning trade turn into a loser. By a winning trade, I don't mean something which has just temporarily and gone a little bit into profit. I'm talking something which is substantially in profit. So we're going to look at the kinds of orders that you can use and strategies and tactics you can use to make sure your winners stay winners and actually become bigger winners rather than holding on to them too long and then they become losing trades instead. So that's the one of the critical aspects of this lecture. The second thing is we're going to be looking at logic, not impulse. We are very much interested in what it is that we can do as a matter of logic and rules-based trading to avoid problems of emotion. Thirdly, we're going to show through the strategies and tactics that we use how we're never risking more than 2% of our overall trading capital on any one trade. We're going to be triggering these trades fundamentally based very often on what the background economic news might be, but entering and exit based on charts. And you'll see why that is the most economical, efficient, effective, profitable way of doing it. We're going to be looking at multiple positions so that any positions we feel weakly about, why do we still get into them? How do we reduce our position size so that we bet always stronger with a stronger hand or a stronger trade? 6, being right but being early simply means you are wrong. And I'm going to show that with the tactics to make sure that we don't actually get in too early. We're also going to look at the difference between scaling in and actually adding to a loser. Adding to a loser is bad, scaling in is perfectly fine. What is mathematically optimal is psychologically impossible by this. What I'm going to show you is that what might seem to work on paper doesn't mean it'll work in reality because our emotions get in the way. So how do we avoid those problems that the best traders always do manage, in actual fact, to avoid? Risk can be predetermined, but reward is unpredictable. You'll see that in our trading strategies. Given that we can say this is where we're going to get out, we can predetermine that. Most people make risk unpredictable because they don't know when they're going to get out. And given that reward is unpredictable, what do we need to do? How do we make sure that when we are winning, we continue adding to those? And how do we make sure that when we're unsure, we don't just quickly take a profit, but actually let those winners run on and on? And finally, no excuses. Once we've got some specific trading rules, we have no room or need for excuses. And I will show you that as well in this lecture.